Today, I'm super excited about this topic because it's so relevant to our industry, and that's building a future mortgage company. And have one of my favorite podcast interviews, and that is Jay Promisco, who is CEO of GoMortgage. He's well known in our industry. Prior to that, he was the head of Sierra Pacific Mortgage. So, Jay, I'm thrilled to have you on this topic, which we can't talk about enough. And I think that just to start off, let's look at, I think, the future component because I know you're working on this topic yourself, about how do you see the next 2 or 3 years for the mortgage industry?
Sure. Yeah, I came over here because it was this unique opportunity to not inherit something, but build it the way I think
Hmm.
it needs to be built. And when you look across the industry, Pat, and you know this too, that every mortgage company says they're a tech company, but most mortgage companies aren't tech companies. They're staffing companies with a website. That's really what they're doing. And
So true.
so they have, the answer is, well, we're busy. Let's hire a bunch of more people and, not a real consolidated tech strategy around it. So we're trying to do something different here. So it's exciting.
So talk about that. And I loved your analogy because I would make that same comment where I would say inherently that the sales model has been broken for a long time because it has been a staffing model. And but the reality of it is we've had refis that have gone on technically before your time and my time in the
Mhm.
industry, if you look at it from a capital market standpoint. And so now it doesn't look like we're obviously entering into a market that refinancing won't necessarily save you. What are your thoughts on that?
Yeah, you're exactly right. And so if you were looking at your company today, which I'm doing with mine, how do I make this sales process interest rate agnostic?
Hmm.
So I need
Hmm.
to be able to perform no matter what it's doing. And if you go back in the Wayback Machine, even just 3 years ago,
Yeah.
we were
Yeah.
selling 7.5%, 8%. And people were surviving, right? And
Hmm.
people still need money and they still have things happen in their life, but people still want to buy homes. Now, we're dealing with a market that is slowing down just from a simple sales number of sales happening in the United States right now. And
Hmm.
clearly it's a geographical issue and certain markets are performing better than others, but you need to figure out a way to make this work no matter what the interest rates are doing. And I remember my mom, she's been doing it forever, and she's like,
Yeah.
if we just had one more refi, boom, I'll retire, right? And let's just assume it's not going to happen because what's going on in the market today is anything but good for yields. The inflationary component is starting to trickle in, and the longer this conflict goes on, the more chances
Hmm.
this inflation is going to be sticky. So I want to build it. People should be looking at, can I still succeed at 7 or 8% interest rates?
Right.
Maybe they stay in six, or maybe they get down to fives, maybe, and that'll be a blessing.
So, do you see, and part of my thinking is, I know we talked about it last week, is that I see the future obviously being the database component, which is really what you're wanting to be an expert in. And so often the loan officers don't work their database and lenders don't really require it. And it's really a volume strategy versus a profit strategy. What are
Mhm.
your thoughts on that? Because I just don't see our standards of more volume equals more profits, but that's typically what most leaders think about.
If I look at the whole thing, you touched on the CRM, and I'm going to
Mm-hmm.
upset every CRM vendor out there. These things are incredibly expensive, and
Yeah.
the adoption rate is poor.
Yeah.
And it provides a return in certain instances, but the core issue of CRMs as a whole, if the company's data set isn't good, then you're putting garbage into a really expensive system and having nobody use it. So I think getting your companies should be focused on their data set. Like, is the data right? Is the data accurate? Is it contemporary? Is it useful? Is there a way to look at it differently? We're looking at every loan officer in the franchise and all the different stages, and are they active and where are they being active at? That's super critical. I think more importantly, though, Pat, is if your org structure today looks like it did in 2019, you're so far behind where you need to be, right? The
Mm-hmm.
org structure needs to look completely different as you move forward. You've seen, a little bit of a coming to Jesus on the mid-level manager, right? So
Mm-hmm.
providing
Mm-hmm.
value, yes or no? If they're not hiring, recruiting, helping loan officers do more loans, why do you need them?
Mm-hmm.
Because if I have a good data set and a good CRM system, Not sure that's a very valuable position anymore. So you need to look at your entire organization, your org structure. And this is a this has been a technology and people problem for the last 40 years.
Hmm.
What it has been. So you have to figure out a way to get these two things to work together. And 100% of your technology is dependent on your data set. And
Hmm.
again, what is getting inside of a CRM or LOS so that your loan officers have actionable data to work with on a day-to-day basis.
So, how do you see it as from the strategy standpoint? Because I think a lot of lenders over the years really have outsourced the thinking to the vendors. And
Mm.
so the thinking is, well, now our latest one is the AI providers, supposedly, is
Mm.
what's going to be our solution to really a cost to production problem, which is 65% of our expenses are tied to the personnel side, which you already talked about. And so, do you talk about this? And you see it at the conferences, frankly. I think that's part of the reason why maybe attendance could be certainly not as well as it used to be, is that the ideas aren't really coming from the lenders. They're waiting for the vendors to be telling them this is what you should be doing. What's your thoughts on that?
Yeah, I look at my vendor stack the other way. This is what I need you to do, and here's why, right? I'm not
Hmm.
having them tell me why. I did quite a bit of consulting in between
Hmm.
Sierra and the new job, and specifically around artificial intelligence. And what I found more than anything was people bolting on AI to an already broken process. And really,
Correct.
what I saw companies doing, you didn't transform the company, you just started making bad decisions faster. That's really all you did. Right? So you're like, you have all this AI and it's awesome and it costs you money. And then at the end of the day, you're still taking this loan and having people look at it. And it just, it's not the appropriate way to look at it. And in my LinkedIn, probably in the last week, I've had probably 20 different providers saying, look, we have an AI agent that's going to automate your workflow.
Right.
Well, maybe. For me, the loan origination system, your core system of record, is about to become the most important asset in the mortgage company.
Hmm.
So, or the reason it dies, because again, if you're on some kind of legacy LOS platform that has zero automation in it, now again, you're bolting on more vendors.
Right.
And by the
Hmm.
way, your loan origination system on a per funded unit is exceptionally expensive to run. So it better be
Hmm.
doing more than just taking a 1003 in there for you. So I think AI is a little bit of a buzzword.
Correct.
And and sure, I could add 16 agents into my platform. By the way, all 16 of those agents cost money to deploy. And if you're
Hmm.
still running on the same tech stack, you're still running on the same process flow, running with the same amount of people, you got a problem. So you're
And And so talk about, and you've already kind of really already mentioned it, is that the adoption rate of the technology has been typically pretty low in our industry. Mainly, from my viewpoint, is that we have a setup that's similar to McDonald's, where but we don't teach anybody how to bake the hamburger, so we let everybody bake their own hamburger. And so this adoption rate component is really a big issue, and it's been one for a long time. What are your thoughts about that? I mean, lenders seem to be very hesitant to require anything, so each loan officer kind of does its own thing. And as you move up the totem pole, the more successful, certainly, they're not being told to do anything.
a little bit of that probably is when the market is where it's at, every loan that's coming in the door is really special to a company.
Yeah,
And
yeah.
so you're sitting there going, I need you to do this. And a loan officer's like, I don't want to do that.
Right.
And in the absence of making the guy take all his toys and go somewhere else, you go, fine, do it your way.
Hmm.
That is the major issue. And
Right.
I'm probably going to get myself in a bunch of trouble here. But and I was a loan officer for a very, very long time, and I had good years and bad years and everything in between. Loan officers today are forcing companies to make decisions that will affect them in the future. And what I mean by that is at some point, and I've been in boardrooms with a bunch of CEOs going, these loan officers ask for too many things. They're getting paid way too much money. I
Hmm.
can't serve everything that they want me to do. And so they're figuring out a way to cut the guys out. That's
Sure.
you talk about an AI loan officer and all those things. There are companies today saying, I'm
Yeah.
tired of these prima donna salespeople. I don't want to listen to them every single day, arguing with me about this process that I need to implement so that I can provide them a better rate, right? So that's like most of the technology that you're trying to deploy or automation you're trying to deploy is to do one thing, and that's put yourself into ability to compete on a national scale and compete against some of the bigger guys that have more scale. And so I'm sitting there, you're trying to put all this process in so that I can run on lower margins.
Correct.
And your loan officers bug you all day about lower rates. And I'm
Yeah.
here trying to help them and they don't want to participate. And so I think that is a disconnect
Right.
that needs to be solved for. And loan officers, I would encourage you all to look rationally. And there's this terrible thing going on LinkedIn today where I have a number of talking heads talking about how bad mortgage companies are and they're trying to take all your money and they're not being
Yeah.
so all this thing. But a owner of an IMB is sitting there, has 100% of their net worth on the line. And by the
Sure.
way, we originate a loan today, and that loan stays with me for 7 to 10 years. And by the way, I'm supposed to give them the best price on the street, not price for risk. So loan officers need to be careful here. I think there's a way though to take a loan officer that's young, hungry, willing to try something new to get better and get them focused on a new way of doing business. So,
Well, I'm glad you brought that up because it's one of my favorite topics, and I talk about this all the time. And so we've talked about a lot of the challenges, but let's talk about the building of the future mortgage company. What do you think it's going to look like? Obviously, and I'm talking 2 to 3 years out because I think the change is rapid now. I don't know that lenders really recognize how rapid it is.
right. There are two things you need to be exceptionally good at. Your loan origination system needs to be dialed with a future look at automation, uber alles. The second thing you need is a tremendous amount of sophistication in the capital markets. Right now, it's an interesting market. You have to be exceptionally good at what you're doing to make
Yeah.
sure that the trades you do today are going to have the
Hmm.
revenue you thought they were going to have later. And those that can be a little bit more forward thinking,
Hmm.
specifically in capital market state like this, there's a huge change in the way spec payups are paid,
Hmm.
and the volatility in spec payups is a big deal. And so, how do I translate that into a rate sheet every day? And how much of this do I pass through? And oh, by the way, there may come a day where I thought I was getting a spec pay up and I sell the loan and that spec pay up is gone, right? And so,
Hmm.
those types of things are super critical. The third thing is probably channel diversification. And I'm going to go out on a limb here. There's this big, huge debate on retail versus wholesale. For
Hmm.
me, a loan officer is a loan officer, right?
Right.
And I'd be willing to bet that the borrower really doesn't care. The borrower
Hmm.
cares about a few things. What's my price? How certain are you that this loan's going to close, and speed,
Hmm.
regardless. So an omni-channel approach, and you can see that in kind of the biggest company probably
The
out there,
biggest companies. Yeah.
right? That, there's a reason why Rocket is doing so well. Well,
Hmm.
they have a omni-channel. They don't care where the loan comes in as long as it comes in. They have a
Right.
phenomenal manufacturing platform. By the way, they have all these other access to 1 out of 6 loans in America from a servicing perspective.
Sure.
They have a leg up.
Hmm.
So I think it's your core platform, the data that you can derive from that, sophisticated capital markets, and then figured out a way for your loan officers to reach more customers in an automated fashion.
And so when you're talking about the middle tier players,
Mhm.
obviously what you see with the bigger guys, the Rockets and all of those folks, is that they have moved to obviously scale component. A middle tier lender, it's going to be difficult for them. They have to really determine kind of how they're going to play. And is it possible to be, in other words, if lowest price is the driver for everything, which of course there's an argument that there's another side to it, what's the middle tier mortgage banker have to really think about to be certainly successful?
Yeah, I've thought a lot about this.
Hmm.
I think the next cycle will reward efficiency, not volume. And here's
Hmm.
what I mean by that. When you're funding 400 million a month, everything feels great.
Hmm.
What's your organization look like when you're doing 80 or 100?
Yeah.
Can you still make it work? And I think that's most IMBs are thinking that way. And maybe you're a smaller tier lender, kind of like us right now. you need to make this thing work regardless of the volume that's coming in. Now, clearly,
Hmm.
growth helps a lot of things, but being methodical about the approach. And I know several, I mean, you can see it in the public earnings of some of these big companies that are
Yeah.
funding billions of dollars and losing money. And that's a mistake. At some point, somebody says this doesn't work anymore, right? And there's not an
Hmm.
infinite amount of cash to deploy towards a mortgage company. So it's efficiency. Can you be profitable at 50 million? Great. Keep it there. And then when you're doing 100 million, you're really profitable. I think
Hmm.
that's what where the reward is going to come is those that can sort that out.
Hmm. So if you look at it from an efficiency standpoint, and I'm glad you brought this up, is it a back office issue or more of the front side? What I think is that the human capital side has never been addressed in mortgage banking. And as a result, we have to have more people who are inefficient to try to make volume. And that model has worked because of a decline in capital markets interest rate environment, which we've had for a long time. And so as a CEO, are you looking at the back office making it more efficient, or you're looking at the front side?
It's both.
Yeah.
It's funny. And I've seen this so many times where people, like companies, don't focus on the back office and they're
Hmm.
doing millions of billions of dollars of loans that
Hmm.
can't get sold. And that's a mistake. And so it's like I've seen it where companies like, hey, we only have two shippers. Okay, well, how long is it taking you to get loans off your warehouse line? About
Yeah.
45
Hmm.
days. Well, guess what? That's like 8 basis points every 5 days that thing's on there. Like, what are you doing? Like,
Correct.
go hire some people to fix the back office.
Right.
And you can do a lot of that with automation, but that's a people thing. And that's capital well deployed, in my view. The front end is also the important thing. And what we're working on here today is if I can get a good answer after a borrower submits a loan application within 4 or 5 minutes, what I mean is a good answer. Yes, this guy
Mm-hmm.
can do it, or gal can do it, or no, they cannot. That
Mm-hmm.
saves everybody time throughout the process, right?
Mm-hmm.
So most loans go sideways when we think it's a yes, and we get 3 weeks in, and we find that it's a no.
Right. Right.
And so there's so much technology out there to be able to figure out if this is a real yes now or it's
Mm-hmm.
not. Using the VOI, VOA vendors, super important. The agencies are really pushing us to utilize that, which tells
Mm-hmm.
me everything I need to know about this borrower up front. Yes or no? Yes, you qualify.
Mm-hmm.
No, you don't. A lot of capacity is taken up with loans that can't go or are given inaccurate
Mm-hmm.
information up front. So the front end is super important to where I want a loan application. I want the document set. I want the automations done. I want a full underwrite done. I want it the same day.
And
And
so
and that's where you pick up efficiency because now everybody in the team knows what needs to happen.
So do you see, and part of the argument that I would make is that you see that there will be pretty quickly, pretty soon, the function of the loan officer typically in the past was the structure, kind of what you're talking about. Can the loan be done, yes or no? And of course, that's been a function of age and experience, and that's how we defined it. I really see that kind of not being as valued in the loan officer today. The issue is who's creating the interest in even buying a home or refinancing or getting or moving up to a next home. And so this efficiency of being yes or no, we still have the other problem that if you're not as a loan officer using video, I think the loan officer role needs to be an influencer, and that's a much different role. I often use the quote of Kim Kardashian, which maybe not the best example, but anyway, or maybe the Met Gala that was just the other day.
No
So
comment.
yeah, no comments. I agree. And so, but I'm just saying, I think what we want from them is certainly different. And that's why we haven't really adapted. We're overvaluing experience to say yes or no, when essentially what you're talking about is having the technology to be giving that answer quickly. And what's your thoughts on that?
Yeah, well, I have some amazing loan officers here that do a tremendous amount of volume. And
Hmm.
what I find that gets frustrating to me is they spend a lot of time structuring loans. So my thought is,
Yes.
what if I take
Yes.
my best salespeople in the organization and say,
Right.
look, I just need you to have them fill out this thing online, right? Go make it rain, go create your relationship, spend more time
Correct.
out in the field, creating video, being an influencer, whatever you want to call it, because those people, like you, Pat, you know this, a good loan officer knows how to sell, knows what questions to ask, knows
Hmm.
how to get a borrower engaged, gets them to know, love, and trust them. So
Hmm.
if I can take my best people, and I believe in this, that the best mortgage company will have fewer people, but they'll be better people and
Yes.
they'll have way more
Yes.
production.
Right.
So this is the problem we have. We have a bunch of loan officers out giving bad advice all day long. Well, that's not helpful. So what if we took my best salespeople and gave them tools so they didn't have to horse around with the calculation income and all these types of
Right. Right.
turn them loose to what they're really good at, which is going and building communities and being out in
Correct.
the world. That's where I see this. That's what I think
Yeah.
the most effective thing is.
Well, I agree with you completely. I don't think that the depositories, as an example, never valued the selling process. How they define the selling process is much different than what really is involved. They're selling their brand and they hope that they don't need a loan officer can actually sell because the brand sells itself. But what makes the advantage of the independent mortgage bankers is that they are all about selling. I mean, it's you got to have salespeople that actually can sell. And it's not necessarily under this model, which I agree with you, it's going to, you don't need to necessarily have the longest experienced person. That's my point. You need more of the technology folks, the people wanting to get on video and being 25 years in the industry, you may not be that type of person because you've been used to being a structure. What's your thoughts on that?
Yeah, I might disagree with that. I think you need a combination of both. Number
Yeah,
one, a bunch of my really great salespeople are going to retire in the next 5 to 7 years. I gotta
right.
I gotta figure out how to replace that. I would also just a shout out, if you're a salesperson in this market, I want to start by saying we realize how brutal this is. You could be the best salesperson in the world
Hmm.
and get beat out every single day. And if your batting average is 300 right now, congratulate. If you're doing 3 out of 10 loans, you're doing great, right? So
Hmm.
I think you need a combination approach, Pat. You need
Hmm.
either these new guys, somebody's got to train them, right?
Oh
So
yeah.
you got to teach them that. And there's no better way to do that than somebody that does a bunch of loans and has been in the business a long time, right? Because this is not something you can teach. I think I've seen a lot of loan officer academies start and grabbing kids out of school, which I think is a great idea. Taking a college kid with no bad habits, no hangups or hurts, and do like Pat, you and I did when we first got into
Sure.
services. Here's your Series 7 and a phone book. Go and figure it out. I think it's a combination approach. You need to take care of the people that got us here for sure
Sure.
and
Hmm.
provide them a runway and help them do more business. And then you got to figure out what this next gen looks like as well. I think that is the influencer market's not going away. And if
No.
you took an influencer that actually knew what they were talking about, it'd
Yeah.
probably be
So,
really successful, right?
oh yeah, the
And
double
by the way,
comp.
again, these loans are hard. The stuff we're doing is complicated and hard. And there's no slam dunk loans anymore. The stuff that we're doing is complicated. You need to know your stuff. You need to be able to provide good answers to a borrower so that they trust you.
Yeah. So if you had to, and I have to have you come back because I think we're addressing all the topics that nobody really discusses. And so this whole component of what are a couple takeaways to our sales leaders listening today that you think that they should be, emphasizing and actually doing because this runway is going to be short. I think it's getting shorter every day because I just think you're talking about we lost 125,000 loan officers according to Reddick in the last year. And so we're getting closer and closer to all right, this is not the same market that we've had before.
I'll give you an example. We had an awesome AI underwriting system that we were kind of saying, hey,
Hmm.
use this. And then we went out to the field and say, do you like this? And they're like, well, we like it, except it's really hard to use, right?
Yeah.
And so the advice I would give to our sales leaders, if you're sitting there every day saying, here's the new, some of these companies, I'll liken it to, they have the cheesecake menu of services available to their loan officers. And like, we've got this and we've got this and we got
Yeah,
this
right.
and we got this and we got this. Talk to your team and find out what's actually working and
Hmm.
finding out like, hey, what would actually make your job easier? Not like, hey, I think you need to use this, it's gonna be better. What do you think you need? Have a real conversation with them. And if they're struggling, which a lot of them are, figure out what they need to be helpful. And maybe that's a coaching platform or whatnot. I think it's important to narrow down your scope. The human brain only has the ability to think about three things at one time. So if you're having to
True.
focus on 12, it's not going to work.
Yeah.
What's a way for you as a sales leader to get your loan officer out of the office and working on building relationships
Hmm.
versus structuring a loan? I think a really important conversation. And then if you're a sales leader, have a real conversation with your leadership. Like, what's your plan here? And more is not necessarily better. That we still have companies that are grabbing loan officers, and if they have a pulse and an MLS, they hire them,
Yeah.
hoping that at some point there's a refi boom. So I think
That's,
it's having real honest conversations with your sales team, like, hey, you had a bad month. What happened? Like, is everything okay?
yeah, yeah, for
What
sure.
what can we do to make your life better? So
Yeah. Anything else that you would like to share, Jay? I know, again, we've covered a lot this morning.
no, I think I was on last year and I was like, hey, it's been 3 years of this nonsense. Now we're working on year four. And so you just have to keep focusing on getting better and not trying to do everything all at once. I think I see companies trying to do a million things,
Yeah, it's
try to figure out the three things you do really well and do those exceptionally well.
hmm
And think of it as a methodical approach. Nobody's just going to drop an LOS and add AI and everything's going to be great month one. I've launched 3 loan origination systems. They're painful. They take a long time. But think about what you want to look like next year at this time, and then take small incremental steps every single day. Uh,
hmm
Wake up with a good attitude because we're still in a business that's exceptionally rewarding to be in.
It is.
And have fun. Like our thing here is like let's make mortgages fun again or something. Like it just you need to laugh at yourself and not take yourself so seriously, but have a plan to succeed in the future.
Yeah. Well, I love all that you said today, and certainly for all our listeners to reach out to Jay. Jay, how can they get a hold of you to continue the
Yeah,
conversation?
yeah. Catch me on LinkedIn. I have a pretty big following there. You can reach me at letter J Promisco at GoMortgage anytime.
Well, Jay, it's always fabulous to talk to you. I certainly appreciate you spending the time this morning, and certainly for our listeners to check out. We actually have a new book on managing best practices in mortgage lending from the manager's standpoint, and check it out on Amazon. Thanks again, Jay, for sharing everything today. It's
Always
been
a
great.
pleasure being on with you, Pat. You're a
Yeah,
legend.
thanks. Check out my new book, Mortgage Manager Mastery, where 23 mortgage sales leaders shared their best practice in managing sales staff. The book is available on Amazon in Kindle or paperback.